There are basically two types of currency exchange trading: Forex fundamental analysis and technical analysis. There is a lot of debate about which is better. In fact, both are important.
The simplest way of looking at these two methods of analyzing the market is to say that fundamental analysis considers the world economy while technical analysis looks at charts. In this article we will consider the different fundamental or economic factors and how they can affect your trades.
It will be clear to anybody who has even the most rudimentary understanding of the currency markets that a nation's economic status will have an effect on the value of that nation's currency. A healthy economy means a strong currency, just as a company's stocks will rise in value when that company is doing well.
Anytime that a major financial or economic report is due from one of the main players in the world economy, you can expect to see an effect on the foreign exchange markets. This includes reports of the country's gross domestic product, statements of the national debt, inflation, employment levels and trade deficits. Many of these reports are given out regularly at predetermined times and dates, and you will see a lot of volatility in the Forex markets around those times.
It is very important to keep track of when these reports are due, not only in your own country, but in all of the countries whose currencies you regularly trade. You cannot rely on national newspapers and television for this. They do not carry international economic news at a sufficiently detailed level. You need specialist publications. Many people use the internet for this purpose.
However, it is not only the economy that counts. Social and political forces also have a strong influence on a nation's currency values. Events such as an election, civil unrest, or a natural disaster can cause fluctuations in values.
Some of these events are difficult or even impossible to predict, but you can still base trades around what is likely to happen after the event. You can use historical analyses to see what happened in the currency markets the last time there was a similar event.
If you want to base your trading around fundamental analysis of the Forex markets, you will need to be the type of person who enjoys following financial, political and economic news.
The alternative is to use information about upcoming events to avoid trading at those times. People who prefer to rely mainly on technical analysis will do this. But you still need to know what is happening in order to keep out of the market. So even for somebody who prefers basing their trades on charts, Forex fundamental analysis is important.